Hello and welcome to the ISE ETF and Index Outlook for May 7th, 2012. This is Patrick Sresna. As always, start off with the S&P 500 using that Spider Exchange Traded Fund symbol SPY. We've identified the trend line over the last month or more and suggested that a break of that level would indicate that the uptrend has come to an end. Now, when that top came in and broke, we were suggesting that there could be a market correction that could even go as low as that 127 to 129 level on the downside. But then on Apple's earnings, the market very quickly rallied back up to its previous highs. This was a very important moment because we're now seasonally in the sell in May and go away cycle at the same time, now that we had an attempted rally that has failed at previous highs, creating a double top. This comes in the same time frame where Apple couldn't follow through on the upside on its earnings, and a number of stocks have started turning down, including some intermarket turndowns of things like crude oil and other things like that. That puts the market into a very vulnerable state. And while we certainly don't know for certain whether or not this could result in a significant market correction, or even something much faster or steeper on the downside, we certainly have to respect the risk that something could develop here. And so we remain relatively cautious on these markets, and believe that being defensive in this market is a very prudent thing. Next, I want to take a look at the ISE Chindia Index, which is symbol ICK, and we also see that we now have a technical breakdown. We were looking at that 51 to 52 level where all the lows have been coming in, and with now the last 2 days we've had a significant breakdown, which opens the window for even deeper market corrections on the downside, maybe down to the 48 level. And if it really accelerates, it could go all the way back to the December lows, but that doesn't necessarily have to. But we're nonetheless looking at a weakening cycle, and we'll be looking to see whether this 48 level, about the midpoint, will act like support during the selling. Next here, I want to take a look at the ISE Cloud Computing Index, which is the symbol CPQ. The ETF trades under the symbol SKYY. And here we have a chart of the actual ETF, and one can see a distinct head and shoulders pattern developing in here, with us now trading right into the neckline. If we have any substantial break of this 20 level with follow through come early next week, then this head and shoulder pattern suggests we could go and retest all the highs and midpoints of the November-December consolidations, which lie in the $18 to $19 area down below. So let's watch whether or not we have a break of this pivot. Next year, I also want to take a look at the ISE Water Index, which is symbol HHO. The ETF on that trades under the symbol FIW, and we more or less are seeing a very similar head and shoulders formation. And we have now a distinct turn down on Friday in this index as well. We see this actually in quite a number of indices, and we'll be watching whether or not Monday and Tuesday bring the follow-through selling that could really give a number of sell signals on the downside. Nonetheless, this 88 to 90 level, we'll be looking to see whether the water index can continue to hold that support, because a break of that line would open the window for not only a test of the 84 to 86 zone, but we could even be testing the 78 to 80 zone on the downside if they really gained some acceleration on the downside. That was your ISE ETF and Index Outlook. Thank you for joining me.